So in this video, I'm going to do a DCF on all tickers in the industry, marine shipping. Let me write that up here. Marine shipping DCF on all tickers. I was going to do a regular video on this, but I figure I'll do it on a live stream. It's a lot quicker on a live stream because the video takes hours. You have to shoot the video, then you have to do all the editing. I'll just go through one by one. I think these are the largest marine shipping companies by market cap, from largest to smallest. It's possible they could be out of order because the market caps might have been a few days old. But so the biggest company is KEX, K-E-X. Hey, Dawood. I hope I'm saying that right. Is it Dawood or Dawood? So I'll just go through one by one. KEX. Kirby. I think I did a video on Kirby. I'm pretty sure I did a video on them. 4.1 billion market cap. They're trading at $68. It was Dawood the first time, right? Dawood. I like to pronounce words and names correctly. I always try to make sure I do that. I don't know if you guys noticed my videos on doing companies from other countries. I always try to pronounce the words right, and it could be a little confusing on some of the words. Like the Chinese currency is a hard word to say. It's not yuan. It's can't remember now how to say it. It's hard to say. Hey Gianni, yeah, a lot of people made good money on Zim, but it's a tough industry. It's very volatile. It might take a while. But I'm just doing my regular model. I'm not going to do a super deep analysis, so we might not get the best values, but we'll see what we get. Neo. Yeah, I should do a video on Neo one day, and Tesla. Okay, so this is pretty close. Should have set up the formatting first. Okay. Some of these small ones, we won't get a good value, but yeah, a lot of it is dependent on the rates, the shipping rates. When shipping rates go down, the market really tanks. I did a full video, like a real thorough video on Zim. So it's probably better to watch that video because this is going to be more of a fast DCF. What? Oh, I'm looking at the wrong one. Okay, so Zim. Okay. So Zim, which is the most popular stock on this list by far. $3 billion. What do you guys think? Over or undervalued? I'm sure it could be really, really undervalued. It's a big difference, right? The fuck? Okay. So 92% undervalued. Significant. MATX. Matson. $3 billion. First I get the future revenue projections. I put down into the model. Then I get stock price, the market cap. I can figure out how many shares outstanding. Now I get the free cash flow. This is really all I need for the model. If you're a member of Patreon, you can use the Excel file. It's you can download it even if you do the lowest level on Patreon. So Matson is 61% undervalued. That's at 155. Now Starbulk. That's BLK. $1.1 billion. 4 is 957, so that's about $1 billion. And then 932. Let's get the Boa Noche. That's Italian, right? Boa Noche or French. 21 market cap is 2.17. DHT. DHT. That'll be another video. Right? DHT is different industry. Let's get the free cash flow put down into the model. I just did a video on Facebook today. Yeah, all these big blue chip stocks just don't look as good as they used to. This is undervalued too. I'm sure Zim's going to be the most undervalued. Remember, investing is looking towards the future, not the past. Yeah, JB, trying to get my subs and views back up. GOGL. How many people do you think were trying to invest in Golden Ocean and invest in Google by accident? Or vice versa? $1 billion, 750 million, 725 million. GOGL, Golden Ocean Group, all marine shipping stocks in this video. I'm going to do a DCF on every marine shipping stock. That's a 1.9 billion market cap. Not many, none of the companies are really big in this industry. It's hard because when rates go down, the market caps really tank, and the stocks just go down like 80-90%. Then they have to do reverse stock splits. This is undervalued too. So looks like a lot of good deals in the marine shipping industry. What's next? CMRE, Costamare. $1 billion for 2025. We've seen that a lot. 1 billion. 1.1 for 2024. 1.1 for 2023. Costamare, VLCCs. I just pulled every ticker in the industry marine shipping. So sometimes they're classified in different categories, but whatever's in that industry. Yeah, Greek shipping companies, stay away from. Like, what's it called? Like Ship, Synergy. It's only has, I guess I'll just Okay. Yeah, this negative really messes things up. Let's see what it would be like. If I get rid of that. Okay, I guess that's a little better. Well, a lot better. And this is CMRE. Okay. Ticker DAC, Danos. Danos yogurt. 887 million. 2024 is 892. And 2023 is 924. It seems like most of these, yeah, lots of reverse stock splits. Especially the companies on the bottom, like Tops and Castor Maritime. I know those are just like ridiculous stocks. They've gone down like 99%. I wish they had 4 years of data. It's another really undervalued stock. I guess people are thinking rates are going to go down a lot, so no one's willing to pay these prices. Wait. Okay. I didn't have that number in there. That's, I never. A lot of these companies I've never heard of. Navios Maritime Partners, NMM. $2.3 billion. That's a lot of revenue. $1.9. Maybe this is a kind of a diamond in the rough. This company. $2 billion of projected revenue in the future. What's the market cap? Can't be that high. It's 700 million. So the projection is for their revenue to be triple their market cap. They must have a lot of future plans. I mean, Zim seems really undervalued. So, and that doesn't mean it's a buy, but it's really shipping rates are kind of the key. This has some negatives, so it drags down their average. It's still almost break even. Or, I mean, look at the revenue growth. It went from 200 million to 700 million to 1.1 billion. It's pretty significant growth. There's still a lot more. GNK, Genco Shipping and Trading, GNK. I did my first short today. My short video, not stock short. $350 million, 311 million, 536 million. GNK, 1531, and 659. See their free cash flow. Well, it's positive each year. That's good. It's hard when there's a lot of negatives. It's hard to get a good value. This might be really undervalued. I know it's pretty close. It's only 10% undervalued. Next is Eagle Bulk Shipping, EGLE. EGLE. So what I'm doing, in case you're watching and you're not sure what I'm doing, I'm just doing a DCF on every ticker in the marine shipping industry. A DCF is just a discounted cash flow model. So I'm trying to predict the stock price using prior cash flows. EGLE. And you could Google, there's probably websites that you can plug in numbers to get a DCF value. $628 million market cap. Get their free cash flow. They had 259 million. I mean, 2022, I think most of these companies did pretty well because rates were so high. I mean, look at the revenue growth from 300 million to 700 million. Look at it. This is overvalued. I guess these negatives really drag it down. Let's see, ASC, Ardmore. Let me just highlight so I know I did it, so I don't get confused. Okay, ASC, Ardmore. ASC. Has anybody heard of these stocks? The ones I'm doing now? Zim pays a 640 dividend, but there is a 25% foreign tax on it. It is best to wait until share price. Also, if you live in the U.S., I thought if you lived outside the U.S., you have to worry about that. But if you live in the U.S., you get hit with that tax also. $154 million. The revenue is really projected to decline. 216, 266. Ardmore. Sounds like a college. 600 million market cap. Let's get their free cash flows. $120 million in 2022. Let's get their revenue. Okay, that's really overvalued. Oh, wait. Yeah, really overvalued. Is this negative really affected it? What happens if we remove that? It doesn't really change it. It's only negative 6 million. And that future growth is expected to decline a lot. So I think that has a lot to do with it. Netty. E-Netty. Netty. E-Netty. $258 million. $2024 is 152. So the forecast is for their revenue to go up a lot. Netty. Let's get their 923, 357 million. So 25% tax in US on Zim? Is it 25% and then you get taxed based on your which bucket you fall in? Like if you make a lot of money, you get taxed like at 37% on dividends. And if you don't make a lot of money, you get taxed at a much lower rate, like 20%. Oh, it's not going to be good. All these negatives. Revenue is not really increasing. This is hard to do because of these negatives. Let's just use, that's kind of cheating, but that's all I can get. Okay. Okay, Diana Shipping, DSX. Who would invest in these stocks? $276 million. $278 million. And then 290 million. Diana Shipping. Yeah, I'm not going to get much of a value the lower I go. We'll see what comes out. Let's look at their free cash flow. What's positive? So that's a good sign. At least I get a normal value. Belly took this tax out. Okay. So you get taxed 25% on Zim dividends. That's not bad. That's like a normal tax. Well, I mean, like if you held a REIT, that would be normal for REIT. It's a little high for a dividend, but it's not that bad. CPLP. I assume you held it for at least, if you own a stock and receive a dividend, if you hold a stock with less than 3 months, like say you bought a stock, a month later you got a dividend, you would pay a higher rate than if you held the stock for 3 months. If you hold it for 3 months and then receive a dividend, you pay the lower tax rate. Like depending on your income, like if you held a stock for like say 6 months and received a dividend, and say you were in college, you don't make any money, you don't pay any taxes. CPLP, Capital Product Partners. $13.27, $2.73. Let's see if they have free cash flow. Well, you can't wait. You can't tell the company, don't pay a dividend. I just bought the stock. So you could wait to sell it. Like if you sell a stock, if you hold a stock for 9 months and sell, and say you make a profit, then you have to pay the higher tax rate. But if you sell after a year, you pay the lower tax rate. So that in that case, you can wait to sell. That's why I try not to sell stocks unless I held it for at least a year. Unless, of course, I'm down on the stock. It doesn't really matter because I don't have to pay taxes on a loss. But okay. Sometimes the model doesn't work, especially with these negatives. So you have to kind of make just assumptions. I just forced it to use the same percentage. Like they converted 10% of their revenue to free cash flow in 2022. So I used that as my future estimate because I can't use the past because it's negative. And it comes out with a negative stock price. Let me know in the comments. I don't think it's so straightforward when I'm saying it, so I want to make sure I'm clear. Shit, I didn't see. Wait, what? CPLP. Okay. Okay. Oh, damn it. We're doing a DCF on every stock in the marine shipping industry. And the DCF doesn't work that well if the company doesn't have consistent positive numbers. So as we get lower down the list, a lot of these companies, the numbers are either negative or some of them don't even have complete financials, especially non-US companies. Because the reporting standards are not as strict in other countries. And if it's a penny stock, like it doesn't trade on the NASDAQ, for instance, it trades OTC, then the financials might not be accurate or up to date or whatever adjective you want to fill in. Let me know if I make a mistake too. Okay, so you're a non-US resident. Okay, thanks for clarifying. That makes a difference. Damn it, Pangea. 7% dividend. That's pretty good, right? That's 55. Yeah, I'd like to do a video. I did a video on taxes before, but I'd like to do one on foreign taxes because I don't really understand it that well. And people have asked me, and I would like to know so I can respond to those people. But it gets a little confusing. Even understanding U.S. taxes can be confusing. And I live in the U.S. and I pay taxes, but it gets a little confusing. A lot of nuances. Just when you think you understand it, there's always these kind of like situations that can occur that change things. I'm gonna just take the average of the two positives, and it's kind of high. I'll just do the 5. I mean, it's just really guesswork at DCF when you use companies like this. I mean, it's not really reliable at DCF on small cap stocks. I mean, you can use it on anything, but it's like garbage in, garbage out kind of thing. Grind rod. That's a hell of a name. Grind rod. That's like a porn star name or a wrestler. Grind rod. It's such a strong name. Like it paints like a picture in your mind, right? It's not like not very subtle. Grind rod. That's like the bully in elementary school. They called him. 1049. $200 million. Even like, I mean, these are small companies, 200 million, but I mean, if you had a company that had a value of $200 million, I'd be pretty impressed. Like if you have a company right now that's worth $1 million, I think you should be proud of yourself. So, I mean, in the stock market, the tiny companies are still pretty sizable companies with significant, customer base. even though like relative to the bigger guys, they're nothing. But look at that. I mean, that could be a diamond in the rough. 79% undervalued. But the reason I say it's a diamond because they have positive numbers. I mean, that's what you want. You don't ideally you'd want a company that's making profits and not just always losing money year after year. Unless, of course, they're losing money to scale up, like Amazon did, but it's hard to really know if a company's scaling up to become big or they're just a poorly run business. You never really know. Of course, they'll never say they're a poorly run business. They're always saying they have a great foundation and they're just um, they're ripe for massive growth. It's never negative. This is a pretty popular stock. I know I've done a video on this one. Not $290 million, 280 million, 70 million. I mean, I don't need exact numbers. It's an estimate, so rounding's fine. $180 million company. I know that they've been paying a pretty big dividend. I think I remember people talking about this company. That's why, every year they have positive cash flow, so they can give you a dividend. That's what you deserve as the investor or owner of the company. The cash flow is yours, so companies like this should be paying a dividend. But look at that, 66%. I mean, $66. That's just crazy. I'm going to use the lowest number because it's just way too high. It's still really undervalued. $87. Secor, SMHI. Secor, that's a nice name. It's pleasant. It's not like Grindrod. So this makes it a little harder. There's no future growth projections. The reason there's no future growth projections is just there's not many analysts covering the stock. So there's nobody to give their opinion on the company. Or the company hasn't provided much. See, even Simply Wall Street doesn't have a value for the company. There's just not enough information out there. But we can still come up with something. I mean, we should have their previous numbers, right? I mean, I don't know if it's a NASDAQ. It is a NASDAQ stock, so they should have, financials. If it was OTC, we might not get much data. This is what Warren Buffett did. He'd spend all his time researching these small penny stocks, and he made a lot of money for his investors. And then when he met Charlie Munger, he really focused on the bigger companies because when you're working with a large sums of money, like tens of billions of dollars, you can't really put it into penny stocks. You have to, it's kind of like scaling your business. You have to put into larger companies. So that, so I mean, it looks like their revenue is pretty consistent. Let's just grow them at a 5%. Okay. Okay, that's good. I just grew them at a 5% from previous years, but they have negative free cash flow most years. It's kind of, they only have one positive. This is kind of hard. I'm just gonna give them, I don't know what to give them. I mean, 5%, I'm just kind of making it up. But I mean, it's really, what I normally would do, I would see what the average convert for all the companies in the industry, which I actually could do. Look what the average is, what the average company converts their revenue to free cash flow, and use that for this company. Next time I do a video like this, I'll have that set up. So I can just use that number. That's what I normally use in my videos. The industry average. Euro Cs. ESEA. Euro Cs. Has anybody ever heard of this company? Euro Cs? Well, they have information, unlike the last company. So somebody's following them. Some analyst is tracking them. Euro Cs. Euro Cs. 1879. It's a big number. See their positive cash flow 2 of the 4 years. Lou, hell no. Yeah, I know, right? These are kind of the bottom of the barrel, the black hole of stocks. Kind of like if you have a business and you want to grow your business, so you advertise online, but you're kind of like, it's like a black hole. Like there's like so many people in front of you that are organically gonna get higher in the search. So like it's almost like a black hole trying to, for people to see you. That's how I feel when I post a video. It just goes into YouTube world, but no one sees it except for like some of my subs who have the bell notification. But outside of that, it's lost. It's lost in the world of YouTube. Okay, let's use that. That's a bit too high. Let's do an average. 2 positives. Still probably going to be high, but not that too bad. Let's see. Gas. Stealth Gas. That's an interesting name. It's like a secretive gas company. We don't just sell gas, we sell secret gas. Stealth gas. It's like they sneak up on you with gas when not looking. So there's numbers out there. So there's one analyst. Look, like this is Simply Wall Street. So you could see one analyst provides. Usually, if you're like looking at Microsoft, it's like 30 analysts provide their projection. So it's much more kind of complete. it's much more likely going to happen when like 30 professionals are giving their prediction. There's just one guy out there who's following the stock. But it's what we have, so we'll go with it. Start talking to your friends about gas. Do you follow gas? Health gas? You guys are gonna have a good year. A lot of 100 million market cap. Let's look at a chart for South Gas. I bet there's a lot of reverse stock splits. No, they were up to 20 in 2007. They IPO'd at about 12, got up to 20. Wow, they really crashed. That's the Great Recession, though. They were paying a dividend. Look at all those dividends they were paying. Then they cut their dividend. Maybe that's when they added the stealth. They were gas. They added the stealth when they cut the dividend because they don't want anyone knowing about it. A very secretive cut. It's a stealth cut. Positive cash flows. Look, I mean, this could be a home run. I mean, right there, they're kind of ahead of 90% of the companies out there who report negative free cash flow. Pretty consistent numbers, really consistent revenue. This is going to be a home run. I have a feeling. Look at that, 63% undervalued. That looks pretty good. I got to admit. I mean, flat revenue, but they're profitable every year. And look at the margins, 24%, even 19% 3 years ago. Here's a company we all know, Castor Maritime. Probably down like 99.5% since they IPO'd. CTRM. This has to have a good amount of people following it. I bet at least 10 analysts are tracking this. IIPR. Okay. Future. Oh, there's nothing for future. Make sure you stick around. After I do this list, then I'll do IIPR. Gonna make it hard. Boy. If you want me to do a DCF, just donate at least $5. The more the better. $68 million. They went from, they obviously did a reverse stock split, a 1 for 10, because nobody really IPOs for $52. So 52 down to 70 cents. Could be a good swing trade, right? I mean, when you invest in a company like this, you shouldn't be holding it for like years. If you can like find a time to invest, look at the charts, find a time, and then like a week later sell for like 100% return. I mean, it's possible with these. They swing a lot. Hence why they call it swing trade. Let's grow it a little from Okay, let's see. Very speculative. $7.19 seems a little. It's just so hard. It's just really. I'll just give them a 5%, which is still. I mean, I don't know. It's really just a guess. There's no way to do a real DCF on companies like this. Okay, I guess I'll do IIPR since someone paid for it. IIPR. I did a video on them a couple of years ago. 300 million. Pretty flat. Future growth. IIPR. If you're into the REITs, the market was up a lot today, right? Or not a lot. It was up a little bit. I wonder why they don't have 2022 numbers. Is this a non-US company? Usually, sometimes non-US companies don't have like free cash flow up to date, it seems. Oh, look at that. That gives me faith in the model when it comes that close. 81 is trading at 75. Plus, you probably get a nice dividend, right? 10% dividend. Wow, it's a really good dividend. But it's a REIT. So the only negative with a REIT or MLP or BDC is you pay the higher tax rate regardless of how long you hold the stock for. So like if you had Microsoft and you got a dividend, say you held Microsoft for a year and you got a dividend, you would pay the lower tax rate, the long-term capital gains rate. But for a REIT, you always pay the higher tax rate. I mean, there's some nuances to that, but I'm not going to get into it. You pretty much going to pay the higher tax rate regardless. But thanks for the donation. What happened? Let's finish out our list. Navios Maritime. It's really the bottom of the barrel kind of companies. I thought it was NM. This says NMM. Navios Maritime. Okay, there's two Navios. There's NM and NMM. I'm not sure the difference. Could be preferred or maybe different series of. We don't have any future. Navios Maritime. $1.79. People see these low stock prices and they get excited, but stock price is meaningless. The market cap is what you should be looking at. 40 million, maybe 41 million. Look at that. It got up to 180. See, a stock like this can never hit 180. People don't understand. Just not possible. It has to be reverse stock splits. See right here, a 1 for 10. So every number before January 3rd, 2019, you have to divide by 10. So it was, this says, say this is about 100. So it was actually trading for 10 on this day. But when they do the reverse, everything jumps up by 10. It kind of screws things up, reverse stock splits. Regular stock splits are okay, but reverse, it makes things kind of screwy. Okay, let's see. 600 million of revenue. That's a lot of revenue. For a $40 million company, that's just a crazy price sales ratio. Could this be like the greatest stock in the world? $93 undervalued. We should put all our money into this stock. This is like the greatest investment ever. Pyxis. Pyxis Tankers. I think it's Pyxis or Pyxis. When you name your company, make a name that people can say. It makes it so much easier for the customer. They do have one analyst tracking it. 40 million, 43 million, 52 million. Pyxis Tankers. $51 million. Okay, we're getting low on the views right now, but I guess it's getting kind of boring with these companies that no one would ever invest in. You'd be surprised. You might be able to find a really good stock. The best investors are the ones who turned over the most rocks. So whoever looks into the most companies, those people tend to be the best and most successful investors. Let's do an average of these two. Okay. We're turning over 30 rocks in this video. Anybody ever hear that expression? The best investors are the ones who turn over the most rocks. It was, what's his name said that, I think, by Lynch, Peter Lynch. Euro dry, dry. Euro dry. Oh, there's one analyst. Yeah, I do think I'm surprised they raised rates the other day because my friend asked, "Do you think they're going to raise rates today?" And I said, "I don't think so because of bank defaults, and they want to kind of avoid that, but they did." But I would think it, banks are just such an important part of the economy, and bank defaults could really ruin a lot of things. So yeah, I would think so, but it's funny when you think you understand something, you you suddenly find out how little you know. Every time you think, oh, this stock has to go down or this stock has to go up, and you're wrong so often. So it's like it always seems the opposite. Just do the opposite of what you think. Like George from Seinfeld, um, 48 million. That peaked at 30, at almost 40. So that seems almost a normal trend, not like these crazy spikes. So this looks much better than some of the other companies. They have free cash flow in 3 to 4 years. Thanks to everything. They are a lot. I mean, they're just so vital because we keep so much money in there. And even though we're backed by the FDIC, it just mayhem if banks go out of business. It's like even if you're guaranteed, even if I guarantee you, like I'm your father, invest $10,000. I guarantee you, if you lose all your money, I'm going to backstop you. But you have to wait. You don't get that money right away. You have to wait like a week or two for your father to like take the money out of the bank, so you annoy him. It's kind of like that with banks. Who wants to wait, especially if you have business? You can't be waiting a week or two with no money. Kind of scary. And then there's always this concern that what if the FDIC doesn't back me, or something happens and the bank says, you just so much concern. Okay, 5 left. Really, really scraping the bottom of the barrel. At least we're still double digits in the views. Okay, no analysts are following this stock. So that's why Simply Wall Street doesn't have a value, because they base it off of other analysts. But we can still our own. United Maritime Corporation, $2.90. Okay, back up to 16. Okay, let's see if we get back up to 20. Come on. 25 million market cap. Okay. Let's see. They IPO'd at $7. Which recently, less than a year ago, they IPO'd. And they shot down real quick to 260, and they just pretty much trading sideways since then. 10% dividend. It's a big dividend. Maybe one of you can make a lot of money with one of these stocks. I mean, this looks pretty good. 22 million revenue, 6 million of free cash flow. I mean, just think of a friend who said, I have this business, it's going really well. In 2022, we generated 23 million of revenue. You'd be like, wow, 23 million. What was your profit? How much cash was left over? And your friend said 7 million. Are you interested in investing? I think you'd be pretty intrigued, right? 87% undervalued. Oh, wait, I messed up. I have to update the revenue. I had the revenue from the last. Okay, still 72% undervalued. GLBS. Globus. If you're new, let me know. Leave a comment if you're new, or let me know where you guys are from. Are you from another country? If you're from another country, say the country. And if you're from the US, say the state. Oh, this has one analyst tracking it. $57 million, $40 million. $62 million. Globus. Globus Medical, $5.6 billion. Globus Maritime, $25 million. $1.21. Look at that. It IPO'd at $176,000. Obviously, a reverse stock split. They probably did like a 50 for 1 reverse stock. They did 4. They did a 1 for 4, 1 for 4, 1 for 10, 1 for 100. So if you took the product of 100, 10, 1,000, 4,000, 16,000. So you divide this number by 16,000. So you divide 141,000 by 16,000, and that's how much they were trading for on this day. $8.81. So they were trading for $8.81 on this day. But if you're a new investor, and I've seen this on my channel, people say, "Oh my God, it was trading at $141,000, and now it's trading at $1.21." They think they're going to be rich. And then when I tell them, no, it was never trading at $141,000. It was only trading that because of reverse stock splits. And they think I don't know what I'm talking about, because they go look at a chart. It's obviously they were trading on that day. So it's impossible. It's mathematically impossible to trade at that price so early. I mean, if you've been around, like only Berkshire trades that high, and they've been around for decades. You can't start out that high. You could start out like maybe 30 and then possibly get to 100,000 after a number of years, but you can't start out that high. It's impossible. But I digress. Is everybody following me? Am I making sense? Any good companies had a reverse stock split? I don't know. I don't recall. I mean, I'm sure there's been some good companies that had reverse stock splits. I can't recall any. There's really it's all negative. So I'm just giving them a 5%, which I don't even know if they deserve that high, but mean, a reverse stock split is the only time a company uses a reverse stock split when it's not a bad situation is when they want to go private. It's called well, I forgot the term, but because when they want to go private, to a reverse stock split helps because it lessens the shares outstanding, so it makes it easier to go private. Tops. This is a garbage company. Tops. 90 million. Now we're down to 8. This is not good. This is not good. 87 million. 83 million. Tops. $0.89. 18 million. Look at this. They were trading at one point, they were trading at 1,000 million billion, 110 trillion per share. So could you imagine if it even got back to 1 trillion? You could be a trillionaire if it just got back to 1 trillion. All negatives. Not too surprising. Let's see the revenue. The good thing about revenue is it can't really be negative. I don't even know how to. I'll just do a 1%. I mean, you really can't value this garbage. I mean, somebody probably made a lot of money on this stock. Well, if you shorted it, you made a lot of money. I'm sure there was chart. Look at these, how many reverse stock splits. I can't even see that. Is it 1 for 20 or 1 for 200? 1 for 25, 1 for 20, 1 for 10. There's so many, you can't even. 1 for 10, 1 for 7, 1 for 10, 1 for 3. They did pay a dividend. I mean, look, it was 238, and then it got up to 5, almost 10. So somebody made money. They could have got it down here, and they wrote it up and then sold off. But it's right here at 15, and it got up to 30. Oh, AIG and MSI. That's interesting. Ocean Pal. That's a good name. That's the kind of name I want to invest in. My Ocean Pal. This probably didn't have anybody following it. Yeah, they don't have any analysts. $0.36 a share. 8.8 million. I'll put it at 9 million. Okay. Another one with. Okay, back up to 13. Oh, they have some positives. That's not surprising. Ocean Pal. Look at that. 11 million of revenue. Let's just take the average of these 3 years. Okay. Let's use that 4%. Okay. Okay, let's use the average of this and this, the two positives. 47 cents. That seems more like it. If you really want a company to be undervalued, you could find ways. PSHG. Last one. Did anybody watch this whole video from beginning to end? You deserve a reward. PSHG. Performance shipping. 80 cents. And 8 million. That was trading at 13 million. 10 million IPO. They've done a lot of reverse stock splits. Look at that. It's not 33 million. It's a lot of free cash flow. Revenue growth. Oh wow, yeah, somebody watched it. That's amazing. Really impressed. I believe you because you're the first person to comment. It's too high. I like it. Guys, PA's performance shipping. This could be the stock we've been looking for. Okay, look at this. Kirby's overvalued. Zim is 92%. Zim might be the most undervalued. Oh no, look at Navios is 93%. Madsen 61% undervalued. Starbulk 46. Golden 40. Costamare 51. Dano 64. Navios. Oh, both Navioses are here. Okay. I wonder does anybody know the difference between NM and NMM? That's a 13% premium, but the other one's a massive discount. NM. It should have a similar market cap. 40. No, they don't. No, they wouldn't. 700 million. Okay, okay. This is MLP. One is the on a partnership level. This one's on a partnership level, and the other one's on like the company level, the operating company. So the partner has more, like the master limited partner has more operating companies beneath it. It's like a holding company, kind of like Berkshire Hathaway. They don't. Berkshire Hathaway doesn't sell anything, doesn't provide any services. They just own companies that do that. That's what holding company just owns companies. Like you guys, you're a holding company. You own stocks. Banco, 10% discount. Eagle Eye is a premium. Ardmore is a big premium, overvalued stock. Netty, Diana, Capital Product Partners, Grindrod, big discount. Not big discount. Secor, overvalued. Euroseas. See, some of these companies down here, like PSHG, look really good. Another one looked really good too. Is it Pixies Tankers? Maybe we should all put our money into PSHG and retire in a few years. 8 million. We can, like, if we pool together, we can buy the company. Let's pool together our funds and then maybe get some friends and family, and we could just buy the company. We can actually, we'll create like our own like fund, like the Scott's Stock Due Diligence Fund. And when we look on the top shareholders, we would be on there. We'd be like 30% of the company. We'd be one of. That's my goal in life, is to be on when I go to a company, be one of the top shareholders. Cable Car Capital LLC. Oh, this is a Greek company. Yeah, I don't know about that anymore. I'm just not that comfortable with Greek companies. I'm not comfortable with a lot of countries, and I'm not the people in the country, just the way some of these. It's too lax, some of the laws, so companies can do a lot of shady things, and you just don't know. So I don't really trust. There's not much kind of regulation like there is in the United States or in like Great Britain or Germany. It's hard to be a fraudulent company in those countries. Like, it's just there's too many eyes. I thought there was another really good one. Was it Stealth Gas? Yeah, all positive free cash flow. Let's see where they're located. Greece again. So these numbers, I don't know. I don't trust it. I don't know. I mean, they might be right, but I don't really feel. I don't know. It's if anybody wants to donate for a DCF, if not, I guess we've gone through the list of marine shipping companies. Hope you enjoyed the video. Thanks for staying on. Watch my videos. Comment, please. And talk to you later. Okay. Have a good one.